Welcome to the Capital News. I am your host, Alex Koritis. Thanks for joining me today. Today is February 25th, 2019. I hope you all enjoyed your weekend. Let me get straight into some of the market news. S&P 500 was up 3 points. Dow was up 60. NASDAQ up 27. Russell 2000, the small cap index, was up $1.25. Oil moved down after President Trump's tweet. So we had some movement. The president likes to pat himself on the back for having the ability to negotiate. He gets to pick up the phone, call members of OPEC, and say, keep it going. Keep pumping that oil because I want prices down. And to a larger extent, prices did tank at the end of last year. Oil was cheap, gasoline was cheap, and now we're starting to see a reversal since the beginning of the year. Will it be sustained? I've had conversations with you guys previously. I don't think it is going to be sustained. Could we continue to see another leg up? Potentially, obviously. But I just think the demand picture, coupled with a lot of the supply that continues from the United States, is going to put a damper on future prices. Of course, that remains to be seen, but that's just my take on it. So we have, again, another presidential tweet that affects the markets. Remember, I've spoken about this many times over. During the bear market, really at the end of it, or maybe this defined the end of it, I should say, President Trump tweeted buy the dips. And in that process, he sent his Treasury Secretary, Steve Mnuchin, to the country's largest banks. And since then, we've been on one hell of a V-shaped recovery in the stock market. Is it running out of steam? In regards to the gold and silver markets, there wasn't much change today. The 10-year bond was up a little bit, now stands at 2.67%. And another thing I want to mention today, because this is interesting, the VIX, the volatility index, was up almost 10%, almost 10% today, and now stands at $14.85. This may very well be a part of the decoupling of things that I said is likely to come true. When you see the VIX move up, especially to this degree, it's usually because there's a big sell-off in the market. Markets didn't move much today. I mean, there was news over the weekend, which I'm going to get to here shortly, in regards to, of course, no other story but U.S.-China trade talks that moved the Asian markets up. And when you looked at the American futures, we were up. And for most of the day, we were up a lot higher than where we ended up at the close. So what's going on here? Is this starting to become buy the rumor, sell the fact, which I have stated numerous times here? The president sort of ran out of juice with putting more gasoline on this fire of a V-shaped recovery in the stock market. Is it? Diminishing marginal returns. People are like, okay, all right, enough's enough. Is that finally setting in? Buy the rumor, sell the news. Although we still don't have concrete bullet points or any facts, any substance to what is being negotiated or what has been negotiated and what's being done. We still have the deadline. That, of course, has been kicked down the road. I'll get to that in a second. But the other thing I want to bring up in regards to the VIX, because this is very interesting. The VIX, as I just previously stated, moves up when the market goes down. And 10% is a big move. It's a big move on a daily basis. The markets were up most of the day. They closed up for all intents and purposes, except the Russell, but that was only down $1.25. So why is the VIX up 10%? Who's getting in there bidding that up? What are they expecting? What's going on? Because I've also stated numerous times that this recovery has not been on strong volume. Strong volume indicates that there is conviction, that there is a lot of people and a lot of money in the market saying, yes, this is going higher. We believe it's going higher. When there's not a lot of volume, we're here. That's where we generally want it to go. We want it to go up, but there's not a big group. So where's the money coming from? Does this go back to President Trump's tweet of buy the dip? And then on that day, you had a 1,000-point rally. So is this the banks doing this at the end of the day or throughout the day, bidding up the stock markets? Is that what's going on here? Is it share buybacks that continue to take place? Because we still do have cheap and easy money. And if you look at the earnings calls and reports by a lot of these companies who have reported, they continue to want to be engaged in share buybacks. There was record share buybacks last year. Are they going to meet that this year? Are they going to top it? Are they going to fall short? That remains to be seen. However, I am of the mindset that even if they meet the same level of share buybacks as last year or exceed it, it's not going to have the same stimulative effect that these companies are hoping for in regards to their share price appreciation. I just don't think it's going to happen because of all of the headwinds that we discuss on this program every day. Those 30 market risks that we talked about for 2019 provided to us by Deutsche Bank and a whole bunch of other things that still remain to be seen as to how those get played out. What's the conclusion? Is this deal with China going to be that great? Because you have to understand, ladies and gentlemen, this president never admits defeat. He just doesn't. It's not his style. It's not who he is. This will be the best deal ever, even if it isn't. So we need to see the details. Tweets are interesting. Tweets might get the stock market to rally on a bunch of people who are hopeful. Hope is not a strategy to bid up stock prices. There needs to be some concrete facts. There needs to be some fundamental news that moves these markets in one direction or the other. These markets need to stop being manipulated. These markets need to find fair value. That's what markets try to do. But when you have a president who's tweeting these things, not only moving the stock market, but now moving the oil market, and you have a Federal Reserve that has done a 180 on policy, well, you can't be surprised, I guess, that we've had one hell of a V-shaped recovery for, 9 straight weeks, at least for the Dow and NASDAQ. 9 straight weekly gains. So you have that. Is it running out of steam? You got the VIX up 10%. What's going on here? Now, also behind this low volume, maybe this is a retail investor rally. Well, retail investors are you and me, the average Joe. We are not considered the quote-unquote smart money. We're just not. That's just industry lingo. We're a retail investor. So is the smart money sitting this rally out? Are they staying on the sidelines? Okay, this is very important. I want you to hear this. I want you to think about this because this is something that I'm racking my brain around seeing if this is what's going to happen. If that's true, that this has been a retail investor rally, the smart money does not get in late. The smart money does not try to get in high and sell higher. The smart money buys low and sells high. That's why they're smart money. They buy low and sell high, what you're supposed to do. Retail investors, on the other hand, typically don't work out that way and don't work out that well. They usually buy high and sell and lose out. Okay? That's why it's difficult to win in the stock market. Because by the time a lot of people, especially if you're the average Joe, you hear about a stock or something that's on the move, it's already made its move. So by the time you get in there, you're already buying high. And then the smart money is going to take out their money because they want to take their profits. Get what I'm saying? So the smart money is smart because they buy low, sell high. And then the retail investor typically buys high and ends up selling low, the exact opposite of what's supposed to happen. So my concern here now is if it's true that this is a retail investor rally, they did well in buying low. The question is, are they going to sell high? Because if they don't, they could get trapped. And they could get trapped because if all of that smart money is waiting on the sidelines, where do you think they want the market to go at this point? You think they're going to buy high and sell higher? They're going to take that risk? We're already at technical levels that is putting this market in a fragile place. We are at technical levels that these markets have been unable to break through 3 or 4 previous times. So this is strong resistance that we are up against right now. Can we bust through it? If the smart money was to come in off the sidelines and push it up, hell yeah, wouldn't be a problem. But is that what's going to happen? Or are they going to use this as a timing mechanism to sell this market short? And then those who bought the dip back at Christmas Eve and have ridden this rally up for the past 9 weeks, are they going to get out in time? Or are they going to have to end up selling at a lower cost than what they purchased? You get what I'm saying here? This is a situation that can be very damning to a lot of people's portfolios, especially if you were in the market in the fourth quarter of 2018, because you lost 20%. You lost 20% if you were lucky. Some stocks went down significantly more. And of course, others didn't go down as much, but if you had index funds and mutual funds, you probably lost 20%. To get back to even, the market has to rally 25%. This market has not rallied 25%, so you are not whole at this point, all things equal. So if this market were to retest the lows, or maybe even go further, is the retail investor going to get out? Are they going to abandon ship and try to take some of these profits if this has been, in fact, a retail investor rally? So we'll see what happens. I wouldn't be surprised one way or the other. And I know that's wishy-washy. Yeah, it's very meteorologist. It's going to rain. It's not going to rain. But this is a market that is just decoupled from the fundamentals. If it was truly joined at the hip, or even something like it, I would say no question this market is going to hit this resistance and it's going to come down. How much, I'm not going to say, but it could come down significantly. But when you got the president tweeting and markets moving in the direction that he seemingly wants, I mean, I don't know what's going on here. It's just one of the craziest things I've ever seen. I stick to my guns, however, over the long term, that this market will sell off, and it will sell off significantly, simply because these markets have been propped up artificially by cheap money. And that bubble is going to burst, because this is an everything bubble. It's real estate, it's stocks, it's bonds. We talk about the auto loan delinquencies. It's everywhere, so there's really nowhere to hide. It's in sovereign government debt. It's everywhere. So long term, there is going to be a day of reckoning, and it's not going to be pretty. Now, let me read to you President Trump's tweet. That way, I don't know if you would have seen this over the weekend or not, but let me just read you what he said in his tweet, and then I want to go to, instead of focusing on a U.S. article, I want to get the perspective from a Chinese article. So let me read these tweets from the president over the weekend. He says, "I am pleased to report that the U.S. has made substantial progress in our trade talks with China on important structural issues, including intellectual property protection, technology transfers, agriculture, services, currencies, and many other issues. As a result of these very productive talks, I will be delaying the U.S. increase in tariffs now scheduled for March 1st. Assuming both sides make additional progress, we will be planning a summit for President Xi and myself at Mar-a-Lago to conclude an agreement. A very good weekend for U.S. and China." So we now know, at least according to this tweet, the deadline has been extended. We don't know for how long. The president wants to meet with President Xi of China at his home in Mar-a-Lago, Florida, to conclude this agreement, to sign this agreement, and to end this quote-unquote trade war, assuming things continue to go well. This was the tweet out of February 24th. This is what moved the markets up in Asia yesterday. This is what's moved the markets up today in the U.S., of course, until the end of the day where these things sort of sold off. Okay, so let's take a look at what the South China Morning Post said. Now, this is a pretty good article. Check it out. I'm not going to read the whole thing to you. It's titled, "Will the U.S.-China Trade War Improve Access for American Firms Seeking to Tap 1.4 billion people?" Again, this is from the South China Morning Post. U.S. President Donald Trump has delayed the application of additional tariffs on Chinese imports, citing substantial progress in addressing the U.S. demands for structural reform in the Chinese economy. This is the second article in a 5-part series looking into these demands, which are the conditions for ending the trade war. Again, check this article out and the others. It's pretty good information. There are several bullet points. I'm only going to read this first one for you. Number 1, the U.S. demand market access. The Office of U.S. Trade Representative, USTR, said in its Section 301 investigation report, which provided the legal grounds for Washington to start the trade war, that China has been discriminating against U.S. businesses, limiting investment in trade flows. The U.S. business community also complained about numerous non-tariff barriers, from bureaucratic licensing procedures to selective law enforcement, as obstacles that hold back the growth of their businesses in China. For Beijing, however, China has already done enough to give U.S. businesses access, as it has been rolling out the red carpet for foreign investors, offering tax breaks and cheap land. In a white paper reviewing its own performance after its entry into the World Trade Organization in 2001, China said it had comprehensively delivered what it had promised, including opening up the domestic market to foreign competition. The dispute is now part of the negotiations between Beijing and Washington to put an end to the trade war, with China and the U.S. expected to sign a slew of memorandums of understanding, including one of the issues of non-tariff barriers. However, despite Beijing's promises of cutting obstacles for U.S. businesses, China is still expected to maintain protective measures, especially in areas that Beijing sees as vital for the country's economic security and social stability, such as finance and cyberspace. China is not afraid of opening up, but it wants to do it on its own pace and based upon its own needs, said Tang Jianwei, an economist with Bank of Communications, the country's 5th largest lender. At the same time, even when U.S. businesses are granted full access to the Chinese market, they have to face new realities, such as less enthusiasm for American brands and fierce competition from local players. Huawei and Xiaomi, for instance, are eroding the market share of Apple in China. That last paragraph, I think, is very interesting. At the same time, even when U.S. businesses are granted full access to the Chinese market, they have to face new realities, such as less enthusiasm for American brands and fierce competition from local players. This takes us back to our conversation where Apple said, we are not going to release our numbers on how many iPhones we sell. And this takes us back to our conversation with Apple that gave forward negative guidance prior to their quarterly report, their fourth quarterly report of 2008. This article sort of summarizes it right there in that paragraph. There's competition. There's better price points. There's different products. What's going on with the branding? Do the Chinese want to be more, quote-unquote, patriotic and buy Chinese? Or do they want to stick with the Western companies, Apple? What do they want to do? Just because you're there doesn't mean you're going to be successful, right? And that's sort of what this article is highlighting, and that's a real risk. You know, the president can come out and say, yep, I signed this deal. It's the best deal ever. But despite the fact that even China being a communist country, President Xi isn't going to say, well, now you have to buy 10 million iPhones. and he's just going to name people, pick them out of a hat, and say, if your last name belongs to these letters, blah, 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 you have to go buy an iPhone. I don't think that's going to happen. I don't think that's going to happen. So we're going to have signatures. We're going to have a trade deal. There's no doubt about it. There's going to be a signing ceremony, very likely at Mar-a-Lago. The question is, what happens after the fact? Now, will this be a great deal for U.S. farmers? Quite possibly. Quite possibly. At the expense of some other country. But in all honesty, that's their problem. They have a president or prime minister. They can go and negotiate their deal with China. So, I mean, that's just the way of the world. I don't know what else to tell you in that regards. But it could be a good deal for some farmers. But what about our technology companies such as Apple? What are you going to do? Yeah, you were there. Yes, we're more lax on some of our technology transfers and this, that, and the other. But we know damn well that our consumers don't like American businesses anymore, or not as much as they used to. They're going to be more loyal, patriotic, whatever word you want to say, to Chinese companies. Or it is possible that the Chinese companies are offering a better product, or maybe it's just a better price point. I mean, iPhones aren't cheap. They're not cheap at all. And the income of the Chinese citizenry is nowhere near the per capita income of a United States citizen. So, yes, we're quote-unquote making progress, but what are the outcomes? And that's really what we're looking for here. That's why this has been a buy the rumor, sell the fact type of story. And I record these podcasts at night when the Asian markets are open, and as of right now, the Japanese and the Hong Kong markets are down. They're down about 0.5 percentage point each. So, what's going on here? I thought this was supposed to be the best deal ever. This is very much buy the rumor, sell the fact. Very much so, in my opinion. What's going to happen with President Trump and North Korean Chairman Kim Jong-un? What's going to happen with President Trump and President Xi of China? What is going to happen with Venezuela? What's going to happen with OPEC cuts? What's going to happen with Brexit? There is a whole slew of things that remain up in the air. I don't think these deals are going to be as great as they are trumped to be. But we're going to have to wait and see. We're going to have to wait and see. I'm going to continue my stance of being cautious. If you are entering these markets or you're in these markets trading or investing, I strongly advise to be cautious. Be defensive. Get into some very strong corporate bonds. Get into the defensive stocks. Do not put capital at risk that you cannot afford to lose. Because these markets are primed. I think this V-shaped recovery is running out of steam. And I just think the risk-reward is no longer there. Of course, if you had bought or gotten into the market at the bottom in December, good for you. Great timing. Good for you. Take your profits. Take most of your profits off the table. If you haven't gotten into this market, I think now it's probably too late. It's probably too late. There's other days. There's other times to make money. Don't feel bad. Stay on the sidelines. Stay on the sidelines. But if you've made some money, take your profits. That would be my advice to you. All right, everybody. Thanks for joining me. It's been a pleasure having you. Please like, share, subscribe. Leave your comments. I would love to hear from you. This is the Capital News. I am Alex Koritis. Godspeed.